Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Can hear you loud and clear, Coach Jay. Happy Monday.
Happy Monday. Welcome to all of our buzzer beaters. Welcome to At the Buzzer, our market recap. Hope you had a good start to your week. Hopefully, you had a good weekend before that. Coach, how was your weekend?
A lot of basketball, a lot of good basketball. Enjoyed it. Um, and was ready for today.
Ready
How
for the day?
about yourself?
Was a good weekend, relaxing. Did watch a lot of basketball. Got outside a little bit. The weather was nice. Played some basketball Sunday morning. Got some
Oh,
wins to start the week, which is always nice. It always sucks when you play on Sunday mornings and you lose every game that you play. I lost the first one that I played, and I was just like, I can't lose again. Um, so, but it was good to get on the right track. Everybody. It's funny because everyone's in their 30s, some guys in their 40s, and it's everyone wants to play hard. You want to win, but then you remember it's just like no one's paying me to play basketball. I just doing this for cardio. So it's always weird when you take it when you get too competitive. I start talking trash in the gym, and it's just like, all right, man. Like I'm playing with police officers and teachers and things like that, and it's just like
easy.
every as long as everyone goes home healthy, I think that's a win in your 30s. But it was good. It's always good to get that competition in. But
All the bones are in place and your ligaments are good, and that's a win.
exactly, exactly. But welcome to At the Buzzer, our market recap. If this is your first time here, we don't always talk about basketball. We're going to focus on the markets. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I am Coach Jay. Been a Topstep performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6. And that is Coach Paul. Coach Paul, go ahead and introduce yourself. And I realized I'm sharing the wrong screen.
Well, while you're getting the right screen, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share my experiences, maybe wisdom, and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. I got the right screen up now. Let's take a look at the markets as far as news goes this morning. We did have some planned numbers out. We had the U.S. S&P Services PMI and Manufacturing PMI numbers coming out. Services came in at 54.3, forecast was 51, and manufacturing came in at 49. Make sure I'm reading this right. Nope. Yeah, manufacturing came in at 49.8. Forecast was 51.7. Outside of that, more unplanned headlines. We're going to, remove tariffs from certain countries, but then we're adding tariffs to other countries. Um, and then uh, the ones that were delayed are now on track again, and the ones that were on track are now delayed. Um, I don't know how you keep up with all of it, to be honest with you. But towards the end of the day, if you saw some of the whiplash that we saw in the equities, it was just with tariff headlines coming out. Anything else you got on the news, Coach?
Yeah, I just noticed that um, Sunday, um, whatever the tweet was taken as, um, there's the tariffs are going to be less than had been expected, reflected in last night's opening. Other than that, the economic news, I don't think really affected anything. And we've talked about it before. The major focus is on what the tariffs are going to end up being. So let's get into it.
Awesome stuff. So let's take a look at the charts. The quote board has made its triumphant return. Uh, that's what I did over the weekend. I rebuilt this quote board. To the downside today, we had nat gas down 1.91%, wheat futures down 1.93%, and I rebuilt the quote board and put some assets that we don't trade on there. So got to take that one off. Let me redo this. Lean hogs down 1.77%, natural gas down 1.91%, and wheat futures down 1.93% for our biggest percentage mover to the downside. To the upside, we had the Russell up 2.48%. Shout out to Eddie. During opening call and all throughout fast markets, Eddie was calling out the move in the Russell, uh, calling it the leader, up 2.48%. Micro Bitcoin futures up 5.34%, and micro Ethereum up 6.05% for our biggest percentage mover to the upside. To round out our big four, we had crude oil up 1.36%, the S&P up 1.75%, gold down 0.1%, and the Nasdaq up 2.07% for our biggest percentage mover out of our big four. See some comments. Coach Paul is double mic'd. He shouldn't be. Give us an audio test real quick, Coach Paul.
Check, check. Can you hear me?
Yep, sounding like one mic to me here. But
How
I see
about
some.
now?
Yeah, you sound fine here. I see some questions
All
in
right.
the chat about the link to coaching. We're looking for that link right now. If we can post it, I'm sure it's somewhere in Discord. If someone is in here in the Coach J Discord and you have that link, if you want to post it in the chat for me, I can post it in the YouTube chat if somebody has it. But let's talk about these charts, Coach. We've been on all day, uh, or we were on together earlier this morning with the opening call. I'm going to start with, we usually start with the equities. We'll go to the equities. But something that was on your scouting report, the Japanese yen. I asked you this morning if you had anything that you were potentially looking at. That was around 8:30 Eastern time this morning. What were you seeing in the yen, Coach? Because it played out pretty much exactly what you were looking for. How did you, take part in this market today, if at all?
Well, I've been trying to buy the yen last week. It hadn't worked, but major was looking at the daily. We closed below it on Friday, and we opened weak today, lower than that, at night. So in the first half an hour, we had selling, and we had some urgency in that selling. They did not; those that selling stuck, played through all night and through the day. Whether it was longs getting out or new shorts, I don't know. But looking at the flow and the volume, this was not the selling was not met by any kind of buying measurable and finished towards the lows of the day. Coach, your mic went out.
I think I see what they're talking about, Coach. I think you have two mics selected in video, so just check the settings, your audio source settings in video, and just make sure it's only using the Logitech one. All right. Thank you for Coach Robert posting the link to the giveaway, 150K giveaway. Again, you can sign up for whatever coach you want. I would suggest if you're a regular viewer of this show, maybe signing up with another coach, again, just to get a different perspective. But sign up for whoever you would like. And again, you're signing up for 3 sessions with the coach of your choice. They are going to be group coaching sessions. Each coach is going to go over technical analysis, risk management, and the mental side of trading. I really think it's an opportunity, if you like the way someone trades, for that tech analysis session to ask some more in-depth questions for each coach.
I agree, Coach. Does that sound better?
It sounds like you might be a little further away, but I think it's fine.
All right.
I think it's fine.
I want to second that. You know, as we learn about trading, it's good to get another point of view. I know in my experience, I looked at many different trading styles. I had different mentors, and it allowed me to create one that I could execute. So this is an opportunity to expand your horizons. and maybe not take one of us, take someone different and see if you can get a more rounded um, knowledge base.
Yep. I don't think there's a wrong answer. I do have to say, if I'm signing up for a coach, it's probably going to be Hogue. Probably Hogue. Uh, but everyone's probably going to sign up for Hogue. But again, really nice call on this Japanese yen short today, Coach. Again, a market that maybe not a lot of traders trade. Anyone here besides Coach Paul trading in the Japanese yen? Again, if you go back and watch the opening call, right around 8 a.m. Eastern time, 8:30 Eastern time, Coach Paul was talking about a potential continuation short if volume came into the downside in the yen. It's exactly what we got, and it played out really well. Uh, Not to say that Coach Paul has this magic eight ball that he looks at and just it tells him all the trades, but it was a pretty good call, right? Nothing is going to work 100% of the time, but really nice trade there. You called out Coach Paul, and I'm just curious if any other traders in the chat trade the Japanese yen.
And you said that right, Coach. It was a high probability. Um, my magic eight ball did not work last week, but this I cut my losses short and gained back all those losses on this trade because we have no control of any trade. We just take high probability trades.
Yep, 100%. So good call on that, Coach. Let's move over to the equities now. I'm going to go out to a 30-minute chart on the S&P. And what a rally, right? 2% up move today. Most of that move happened on the overnight session where we got about a point 0.75, right? About half of that move in the overnight session, the other half through the New York session. We gapped up. We talked about this a little bit during the opening call. We opened with a gap up. Um, and I feel like we've talked about this a couple of times now, but when that gap up is about 1% in the S&P and 1.5% in the Nasdaq, we see continuation. Now today was not the most convincing to the upside continuation day. It was pretty consolidated after that first hour, but a really nice move nonetheless. I think we go out to a daily coach and some of these levels that we've been talking about. What's this yellow line here?
That's the 20-day moving average. We closed above it. This is beginning more and more to look like the 2022 move. Was it the 2022 move?
Yes, it was.
So yeah, looks very familiar. But most importantly, we had that big volume on the low, which the selling exhausted itself. It's more pronounced in the S&P than the Nasdaq. Nevertheless, the selling stopped. We noticed that we were talking about this Friday. We've basically gone sideways. So looking at volume on a daily, look at the trend. The volume is declining. This latest move was a sell move. So the follow through selling is not showing up. And it's rallying on light volume. So we were talking about this earlier today. It's like this is pretty bullish on a volume basis. So closing over the 20, definitely short. At the least, this rally is short covering. At the very least, also probably some pent up demand from the institutional side, which together with the news over the weekend, until the next tweet that says, no, I was just kidding, this market is set up for a nice little rally, from my point of view.
Agreed. Back above that 20 moving average on the daily, 57.98. We closed today at 58.16. Also above the high of this high volume move to the downside that we had, that we have not traded. We haven't traded above this high. I don't recall exactly what the catalyst was on this day, but we haven't traded above that high since we printed it, right? 58.05 was the high of that daily candle. We were looking at that as a potential target for when we opened up during the New York session. And we can see when we go down to a shorter time frame, this is where we consolidated around for a little while. This 58.05s is pretty close to that 5800 major psych level as well. But a really nice opportunity here, really nice opportunity where we traded during the New York session. I was on fast markets with Dakota. We were talking about, markets that are already up 1.5%. Do they really give you opportunities to get into a trade? I'm going to switch over to the NASDAQ for now, since that is what we traded during fast markets. And they did present opportunities, right? Here is the first 3-minute opening range. And if we look at this in hindsight, I had some trades that I short armed. So we had news at 8:45 Central, which is this candle right here. Where's my rectangle? Alt Shift R. Come on. This is news here, this candle here, this purple candle, purple box. That was the PCE news that we had. If we attach VWAP to the session open, New York session open, we came back and checked that VWAP on the PCE news. I'm probably not going to take a trade into that number. But after the fact, I think I bought it at 300, took 10 points out of this trade. It was a 40-point move, took 25% of the move. I'm not going to complain about that. Didn't see the immediate follow through volume that I needed to see on the push up, so was okay taking off that trade. But this one here is one that I can't cut. We were above the New York session open. We came back, checked that anchored VWAP. Dakota was actually short, really nice short by Dakota. I think he was short from 20,329 and was looking for. I got to give a big shout out to Dakota, right? We've watched him trade on TopstepTV for the last year and a half, and we hear him say, "I don't use indicators. I don't use indicators." And trading strictly price action. But as of recent, I've heard him, talk about using VWAP in his trades. I think he's, heard us as coaches use it. He hears it mentioned on Topstep TV. And somebody who's been trading for 15 years, adding something to their process isn't a small thing, right? Because you don't want to just add everything to a process that already works. But in saying, hey, I see how this might be able to fit in my process, not change my process, but fit in it, I think is a great thing, right? Dakota saw that we were extended from that New York session VWAP. Was short from 20,329, and his target was that VWAP, which is exactly where the market went to. He got out of that short. I got into a long, right around 20,280. That's one you got to hold on to. That's what I'm reminding myself. I think this indecisive candle right here at 300s, where we saw some rejection. I took 2 contracts. I got out of one for 20 points, which I'm not going to complain about. The other one I got to try to hold on to and just let it test the stop and let it work, because that was a beautiful trade there. And really the trade of the day, once we got outside of this purple box, this range, the market really never traded back inside of it. We got a couple of tests of the high, but really kind of took off from there. So nice opportunities in the NASDAQ. If I'm doing my own trade review, I got to hold on to the good ones longer. This one, I was 100% okay cutting. The retest of VWAP trade, I got to keep that one. Anything you got on the equities, Coach?
Nothing different than we went over. Looking through to tomorrow. Do we have any big news?
So I wrote it down. We have Fed speakers and new home sales tomorrow.
Okay, new home sales could be a spark, but it's not a major number.
Yep.
So let's see if we continue to get what I'll call allocation buying. Today I define this as allocation by institutions. They got the green light. They had a lot of extra gunpowder. This is the kind of market that can move really quickly to the upside if they still get some favorable news.
Yeah, this JD just said it in the chat. Slow upward drift, that old familiar feeling. Um, that's what it feels like, right? We've been talking about the volatility and how it increased all the way. It increased on this sell off that we had for 3 weeks. The daily ATR is starting to come down, right? Look at what happened in July to August of 2024, where we had that daily ATR increase, made a peak at about 530 points in the Nasdaq, and then as it slowly came off, price was going up, right? And the lower that ATR value is, probably the less volatility in the markets. And we see the markets kind of just drift to the upside on lower ranges
In their natural state.
in their natural state. And we're seeing that ATR value come down. If we get below 375, I'm safe saying it is buy the dip until it's not, because these markets just drift up. 20 moving average on the Nasdaq, 20,313. Let's see if we close above that and then start to make our way up towards this 21,000, where that 200 moving average is sitting below on the daily. All right. Let's move over to gold. What are we looking at on this daily chart, Coach?
Now, we're drifting lower off of all-time highs. Today was really, I would have expected a bigger range. So the long-term buying is still in control. Be a compressed range today. That's another one where the ATR is starting to come in. Nothing much to say there. I actually didn't have a chance to look at gold today, but looking at that is pretty tight range. But we've had a couple tight ranges. Is it losing momentum? Well, kind of.
Until it finds it again.
Until it finds it, I don't want to get short this market. So I'll look for a place. If I trade it tomorrow, I'll look for a place to get in. On the buy side, it can go down without me. How about you?
So I did trade gold today. Gold was probably my better trade of the day to the short side. When we started the opening call, we took a long on the opening range, 1 minute opening range trade. It's a trade that JD and Hoag, who do the opening call every day, are looking for. So I kind of took it just to see what the stats are and kind of keep with the sentiment of this show. But here's the 1 minute opening range here, and we broke it initially to the upside. But it's a trade that didn't work, didn't cost a whole lot. I think risking about $210 on this trade, and stopped out. But then with the added confluences that I have for my opening range strategy, right, where we have VWAP leaving the range, we have price closing outside, testing the rejection of the range, this looked like an opportunity to get in short. I got in short kind of late to this move, on this breakdown, actually, where we kind of made this what looked like a double bottom here, and just kind of reading the flow, seeing volume pick up a little bit, got short right around 30,023, and looking for, actually, nope, I got short around 30,020, right? So I actually saw this volume coming in, saw it starting to pick up a little bit, and said, I'm just going to get in whatever this flow is to the downside. Not going to risk a whole lot again. Got short around 30,022, I believe I was short. Not risking a whole lot, risking about 4 points, because again, this is a momentum trade. It's either going to go or it's not. Risking about 4 points, looking for 30,015 as a target. We hit my target, but if you guys know how I don't trade with a profit target. So once we hit 30,015, if the market wants to continue selling off under it, I want to try to be a part of that as much as I can. We made a low 30,013 and bounced back up. So on this move back up, I'm tagged out of the trade at 30,015 half. Didn't really see any buying momentum to push us up here. Coach, I really liked seeing this candle right here. To the up. Go ahead.
And why was that?
because this was failed buying. They bought it off this low and really no continuation from it from here. I didn't do it on the show, but anchoring a VWAP here, this VWAP flat line, my thought process goes we probably trade in this candle as a range unless we see some volume take us out of it, right? So we traded back up towards the high of this candle. When we couldn't get outside of it, I'm looking at two things. I'm looking at 50% of this candle here, which is the one I initially got in on the short, right? That 50% is right at 30,019, and it was very similar to the high of this high volume candle here. Just a good opportunity to get into a short. Again, not risking a whole lot, risking about 2 points for another trade back down. And I think I took another 6 points out of that trade. So gold presented some opportunities. Again, I think we've been talking about, not wanting to short gold for a long time, but if a trade sets up, I'll go ahead and take it because it is a market that I'm not surprised to see pullbacks in either. Overall, I want to be a buyer of gold, but it just did not present a great opportunity until later in the day to get into longs. And, just taking the opportunity as it presents itself.
Yeah. Well, that was a defined entry and exit. We had one of those today. Mohammed had a beautiful trade like that in the crude where he saw an opportunity, immediately took it, put in a stop. But it wasn't even a thought, but that's part of the process. What you just explained here was reading the flow of the market, taking a trade accordingly with a known risk and a process that you could repeat.
Yep, 100%. Following the process, and that was it. Anything else you got on gold, Coach?
No, that's it for gold.
We are still under that 200 moving average on the
Yeah.
30-minute chart, and I'm looking at this 30-minute candle, and we talked about this one earlier today as well. Wow, I did not realize that that low was there. I would have been a buyer right there.
Well, looking at that 200 is starting to bend. It's starting to tick lower now.
Yep.
So it's definitely losing its momentum in the intermediate term.
Yeah, for sure. And and we've seen it bend a couple of times. Does that mean we get a little bit of a sell-off or a consolidation in gold before our next leg up? We will see.
All right.
We will see. All right, let's go to crude oil. Shout out to Mohammed, had the trade of the day in crude oil. We make the joke sometimes that there aren't many trades, or it's not even a joke, it's a true statement, that there aren't many trades where you get in and you have no drawdown. Look at Mohammed's crude oil trade today. There was no drawdown in that trade, at not even a tick. He got in at 68.25. He paid commissions, and that was the cost of that trade. So it's funny, Coach. I don't know if you caught it, but I asked Mohammed on the opening call. I was just like, you called out the 68.25 level. Is it a blind buy at that level? Kind of just setting up the question. And Mohammed said, and I was surprised by the answer. Yes. You talked about sticking with a plan, Coach. He identified a level, and that was the least amount of hesitation I think I've seen on a trade taken on TopstepTV since we started. The market got to his price, he bought it and just didn't even think about it. And I think that's exactly where we want to be as traders. Not a lot of second guessing, not a lot of, maybe it doesn't work. Whatever he identified at 68.25, the market was listening.
Well, you hit it on it. He bought it and had to stop in immediately.
Yeah.
Immediately.
Yep. He knew exactly he was going to be wrong.
That's a process. I mean, that was like, okay, I'm willing to pay it. What is that? And he'd be the first, and he said it. He goes, well, I've seen this trade. I know it in my head. I know what the risk is. I put it on. So whether it was a winner or loser was what I was most impressed is he got in and immediately had to stop without hesitation. So Crude starting to turn around, finding some upward momentum. Are we above the? Then we're above the 200 bar moving average. I think we're above the 20 on the daily.
Yeah, and to me that was the big one, getting above that 20 on the daily, and then using it as a support on Friday. That was the big one there.
It's kind of looking like uh, an equity chart there.
Yeah, it does. Yes, it does. Crude closing at $69.18. We are still in this range that we've been in, that we were in for Q4 of 2024, but trading in the upper 50% of that range right now. I'd call the high of that range somewhere near $71 in crude, right around where this 200 moving average and 50 moving average are on the daily. So maybe a little bit more room up, maybe a lot more room up if crude wants to go test $80 again. But we'll talk about that when we get there. So really nice trade by Mo. I know there was some news that came out of OPEC today in crude oil. Don't recall exactly what the headline was, but we can see it in the price action. It was this candle right here. Uh,
They were going to ramp
continue
up production.
ramp up production. There we go. Yeah, so we can see it there. Here's a reaction to it. Little quick sell off here. Highest volume of the day. And whether this was OPEC saying that they're going to ramp up production, a random slip up where somebody accidentally sold 3,000 contracts in crude oil, whatever it is, from a technical perspective, if we do the same thing, once we close outside of those prices, the market respects that volume. And just a really nice trade. If you were late to, if you didn't get Mohammed's sniper entry down here, here was a second opportunity to get into a long in crude.
Yeah, with heavy volume. Although
Yep.
that wasn't a class, it was a bit of a J trade, but not a classic because we didn't make new lows off of that. But
Correct. Yeah, that was kind of in the middle of the range.
that was failed selling. Selling being heavy sellers. So heavy selling couldn't take out the buying, light buying, overnight buying. What's going to happen? They're going to
Become buyers.
become buyers.
And MP says, and price go up. Yes, it did. If price don't go down, price go up. All right, so we kind of ran through all the markets there. We got some time left. We got about a half an hour. We do have a question in the chat for you, Coach Paul. And if you guys do have any other questions for us, please put them in the chat. Andrew, our moderator, does a great job of sending those over to us so we can answer all the questions that you do have. Coach Paul, how do so few market makers fill 100,000 plus orders per minute? Do they use an algorithm to fill? Thanks.
Absolutely, it's all computerized. Um, so it becomes an engineering game. They have a pipeline directly into Globex. They get preferential fills. You could say that's unfair. Well, you make a market, and like you just said, it's 100,000 orders coming in, and you've committed to making a market. You have to have first rights of refusal, so to speak, because you're taking the other side of those trades. So they get not only that, it's quick. It's literally at the speed of light. So those flows they need to be, first of all, consistent. You can't have it falter. But they get an advantage. With that advantage, they're able to make markets. The problem is what will happen when we saw the last couple weeks is there's preponderance of selling. They get that. They can't avoid taking all that, but what they can do is, okay, if they are, just an example, if they were 100 up, well, now they're 50 up because they have to get rid of that one-way selling. That's why volatility spikes on the downside. So, and there's a lot of, even though there's a lot less market makers than there are traders using the market, there's still a fair amount, excuse me,
A fair amount of market makers. Um, so yeah, it's all algorithms. It's lightning fast. They're not. It's not like there's a guy going, should we take it? No. What they do is allocate a certain amount of risk capital to make these markets, find the imbalance, lay it off somewhere. It's a great question. That's why, like today, it was a little different. We had the big buying in the first half an hour
In the equities,
in the equities.
on the open or New York session.
New York session.
Yep,
That's
right
where,
here,
yeah.
bro.
With that, that's what we talked earlier. That's a natural process. It's easier to get rid of a buying imbalance for market makers than it is for a selling imbalance. And that's why after the first half an hour, they came in. They being I figured large institutions and short sellers had a cover. Um, they did in the first half an hour. Look at what happened in the ranges after that and the volume. So they could absorb that and trade out of it. And then, by the way, they trade out of it. They could go to the cash. They could do it against ETFs. They could do it against options. And yeah, there's many different ways. But great question. None of it is done. It's all algorithms and speed of light computers.
Follow-up question to that: if there's an algorithm that controls majority of fills, who controls the algo?
Well, that's the market makers. Remember, the algo
I
is
don't think it's
basically,
not just one. I'll say
yeah,
that. It's not just one
yeah.
algo.
What is an algorithm? Well, it's basically like a recipe. But when I was taught, um, think of it as a recipe, of a series of steps of instructions to get to where you want. Now, those all goes in. Coach, you said it best. There's different ones. There's different ones that are measuring arbitrage. And we just mentioned there's probably one that's looking at an ETF versus the futures. There's one with the futures versus futures options. There are multiples, and they're there to distribute volume with an edge. Their edge is they get a point on 10, like you said, 100,000 volume. If they scratch 20,000 of it, that's 80,000 ticks. Now that might be an exaggeration, but that's the idea. And that's why watching volume, there's an imbalance of volume, right? That's the risk. That's what leads a market. That volume needs to be traded out. That's why markets are dynamic. They're not, once in a while they'll go one way, but that's very rare. And they take that risk and they might get hit on those, but they don't die. They take their losses too. I mean, I don't want to just, except for Virtue, what was that, for like 8 years? It didn't have a losing day. But the bottom line is they have multiple algorithms to take an imbalance and arbitrage out of it.
There we go. Great stuff, Coach Paul. While you were doing that, I was finding a character that we can attach the algo to. If you need to attach it
There
to a
you go.
character, this is the guy that's running all the prices. It's Algo Man. Uh,
The ultimate local.
right. Uh, All right. Any other questions that you guys have, please let us know. Kind of light on the questions right now, which is okay. It was an interesting trading day for sure. I'm doing a little bit of review for myself. Again, just looking at this 20,280 area, you cannot get out of that trade from there. It's a 4 point drawdown. I got to have the Mohammed confidence in that trade and just leave it on because 20,280, I think I got long. There was 4 points of drawdown, and that was pretty much the low of the day. But then we always got tomorrow to trade, so I'm not going to harp on it. Just got a review. Any other questions? Crazy ratios in the stream. 742 live, but only 58 likes. Coach Paul, we need some more likes.
Well, I'm going to do my best, Coach Mohammed. Hit the like button. What do you like? You hit the like button.
there we go. Hit
If
that
you
like.
don't like, hit the like button anyway.
Hit it anyway.
So-
Hit that like button for us if you like what we're doing here. And if you don't, give us some feedback. Tell us what we could be doing better. What else you would like to hear on this show? What's the Globex idea for ES? Oh, that's a good question. Sean C. I like that one. What are we looking at for the ES going into Globex or it's into tomorrow? Let's say into tomorrow. All right. So on the daily, we closed above the high of that candle. So at this point, I'm looking for 58.15s. Actually, we didn't close above it. We closed inside of it. This daily candle.
Do we break it in price today?
We broke it in price. Okay, so we did close above it. My bad. I had that drawn incorrectly. So we closed above it. We broke it in price. The high of that candle was 58.08. The close on today was 58.13. I'm looking for this high to hold. Looking for this high. Also, that 20-day moving average, which is down at 57.97. That whole kind of zone, I don't want to see any sellers in there. Towards the end of the day, we did have some negative delta. You would have heard Andre talking about a potential short squeeze in the S&Ps going into the close. There was about a 9,000 contract negative delta, which basically means that throughout the session, there were more contracts market sold at the bid than bought on the offer. And a lot of times what we'll see is into the close, assuming that some of these traders are day traders, we'll see a short squeeze. We got a quick move. If you saw it on MOCs, so sellers were coming in this entire time. So Andre and I started to watch the delta right into power hour, right around here, 58.10s. And all through this consolidation, there was selling in this, right? There's two candles, right? So there's this one here where this candle on the 3-minute was positive delta, and this candle on the 3-minute was positive delta. Everything else was negative for the most part, right? So sellers kept trying to push price lower, couldn't get it to go any lower, meeting some passive bid orders. We got a quick pop up to 58.25 and right back down into that range. You could have bought off of this first one. Again, this first candle here, the range of it at the low 58.11, the high 58.16. You could have bought right off the highs of those 58.16s and just risking this low for a pretty nice trade looking for that short squeeze. But we ended the day about negative 7,000 contracts in delta, which means some shorts are still holding on to those positions. Now, are they resilient enough to continue selling back through the range that we just saw, or do they start to cover those as well? So again, I'm looking at kind of 58.08 down to 57.90. 57.95. I'm looking for that zone to kind of hold, see some buyers come in here and continue to push, or they sell us through that range and we get a retest. What we didn't get pretty much the entire session was a pullback.
No. And interesting. Let's look at what happened last night. We had the first half an hour. We put that range. We held the low. VWAP started trending up. And if we would remove the bars or the candles, we get a better idea of what was going on. There was no. So we can look at it one way. Who is in control?
Buyers all day.
All day. From the get, we could see that again tomorrow. The probabilities are, well, the future is 50-50. So I'm just to keep it simple. Sometimes we tend as humans to make it a lot more complicated than it really needs to be. In the first half an hour, who's dominating the action, and then look at volume or VWAP and see how it's reacting. To me, that helps me eliminate one side. I
Yep.
think there's still hearing that there's negative delta from today.
Yeah.
So let's think about that. There was buying that what came all day, according to VWAP.
Hmm.
And there's imbalance of sellers. that negative delta,
Yep.
and we finished near the highs of the day.
Yeah, so that could mean one of two things, right? Depending on that price action, coach. That could mean that aggressive sellers came in and took control of price and just market sold. Because we'll see that sometimes, right? We'll see negative delta on a day like this, and it's congruent with the direction, right? Negative delta. Why is there negative delta here? Because everyone is just like, we need to get the hell out of these positions that we're in. So we're just going to market sell whatever we have. Today feels a little different, and I try to make sense of it where we had price just continuing to float up. VWAP was supportive the entire time. If passive bids just keep stacking and not going market buy, but just keep stacking under the market and putting pressure on sellers to sell at higher prices, then we get this exact price action as well. It makes sense coming from some of the higher time frame demand levels that we're coming from, right? Just put your passive bids in there and they're getting filled. And you can just keep kind of stepping those orders up. Um, there's one thing that I don't talk about often, but if you have a depth of market up, not on TopStep X, but on certain platforms on the depth of market, you can see, however many levels up and down, you can see how many orders are on the bid and on the offer. I was looking at it towards the end of the day, and it was like 25,000 contracts on the bid and 20,000 on the offer, right? So there's 5,000 more passive buy orders just kind of sitting out there waiting to get filled, which makes sense why we were pushing price higher. But I don't want to get too complicated in that. We don't need to.
Like I said, keep it simple.
Yep.
Measure the first, see how the buyers or sellers react, and make your decisions on what the market's doing, because we are not market makers, we're market takers. As Coach Jay likes to say, swim behind the shark being the big volume.
100%.
Don't
All right.
get in front.
Let's get to some of
Oh,
these
well,
questions we have here. How do you find a price level as a stop loss that algos won't take out? That's like a, is there a, what's the number bigger than a trillion?
well,
Go ahead, coach.
it's a good question. There is no magic formula, but there's probabilities. So the way I look at it is the range, the average range
Mhm.
in the time frame that you're executing in, be it 1 minute, 3 minute, 5 minute. Day trading, those are the ones I would execute in. And an average range, or also known as the average true range, gives me the speed that the market's moving in. So algos aren't. I'm not. All right. Is there algo hunting? Stop hunting. Well, I don't think it's as big extent. It's natural rhythm, vibration of the market at that moment. It changes. The key is, and it's a really good question, is if you're putting it, let's just look at what NASDAQ. Let's say we're executing on a 5 minute. All right. So overnight, the average range is going to be smaller than the day. So last night, and there was a big move last night. Look at what the average range is going lower and lower. Why? Because price is going sideways. This is a pattern. Now, that's why sometimes it's easier to trade the overnight because you can put in a smaller stop without getting stopped out because there's not big movement. So I use two average true ranges. If it's within one average range, you're going to get stopped out a lot. I'm not always. There is no, you know, there's no way of avoiding getting stopped out, but you can measure where you want to get stopped out, where it's outside of the natural fluctuation. 2 ATRs works for me. I don't always get stopped out. I rarely get stopped out. I might get out with a smaller loss than the original measurement because some new information, whether it's volume, VWAP, a moving average, that tells me to get out before then. But if you're getting stopped out a lot, you're getting frustrated.
Yep.
I have been there, like, because at that point, I only want to lose. I don't know let's go look after the opening today.
After the open, the ATR and the Nasdaq was about 26 points on the 5 minute. Once we let some price action come in
Okay, yeah,
for the session.
let's see where it started just before the opening. Just before the opening of the day session. It's picking up.
Right around 15 points.
Okay. Now, I put on a trade and I don't want to lose more than 10.
I'm out right here.
You're going to get stopped out. It's within that average. So if to me it's 30. But as that goes up, it becomes now it's because once the volume comes in, the dynamics work is it's going to expand the ranges. And
Yep.
if you got to size at that point, I'm sizing up. Doesn't mean I'm taking 60 points risk on well, it depends on the size of my account. I don't want to take 60 points risk if I'm trading a mini. So I put it in and say, well, I can do 3 micros. That's what I'm willing to risk according to my account balance. That way, I'm not getting whipsawed inside of the average range. That's where algos, and whether it's an algo hunting or it's the natural fluctuation, I lean towards the natural fluctuation.
There we go. Quick little follow-up question on that. Rich Layton, is there a good model to follow to trail a take profit? I always feel I trail too close, then leave too much on the table. For example, I probably didn't set the best example today, cutting this trade early in the Nasdaq. But what I should have done is just find any kind of high volume. The way I like to trail, find any high volume to hide behind. Right. So if I get long here at 280s, and we get this push up, we get this kind of high volume spike right here. My stop should go below that to allow the space to continue to work. Then we get maybe this one right here as we made some price action higher. Now my stop goes below that. We can see where I would have gotten stopped out. Then we get this one here. This is just the way I like to do it. Just always focusing on volume and allowing it to, so long at 280s, I would have gotten stopped out. You all right, coach? For 60 points on this if I didn't take profits earlier. I don't know that there's a perfect way to do it. Something I've heard Coach Paul mention also is stop, get out on a close below VWAP on a shorter time frame chart. Same thing here. I got in on this VWAP here. I got in for a technical reason. I got out for a technical reason because we closed below VWAP. That could be your option as well. There's a bunch of different ways. For me, I'd like to just trail behind volume, which is kind of that trail behind VWAP thing here, but I'm using the candles instead. I don't know that there's a perfect way to take profits though. Dolby was talking about that on TopstepTV. If I take 60 points out of this move and then it moves another 80 after, am I okay with that? Right? Or does that frustrate me? If it does, then you have to have a profit target and leave the trade and let it work to your profit target with the understanding that it may not hit that profit target, right? For me, I like to trail. You don't want to keep it too tight, right? You don't want to, especially in the Nasdaq, you don't want to say, oh yeah, the market moved 5 points, I'm going to trail three, and then if it moves another five, I'm going to trail another three. The Nasdaq, like Coach Paul was just talking about with the ATR, just is too tight. That's too tight to allow the trade the room to work. Uh, you can use an ATR trailing stop. There's a bunch of different ways. I think just go behind volume.
Here's another way. Is I look at it as if I'm taking 30-point risk. This is for instance.
Mhm.
Well, I think it's reasonable, especially in day trading, 2 to 1. So if it gets 2 to 1 before I get stopped out, I'm done for me.
Mm.
Because that if I could do that, all right, and risk 1 unit of risk and gain two over time, if that's truly an edge on a larger set of data, I allow that edge to work. I'll do that all year. I'm going to have a very good probability of being ahead. Sometimes, and it is where sometimes the frustration is, all right, I got out, I took 2 to 1, and it went way higher.
It's not what you measured
Well,
for.
it's not what you measured for exactly. And how many times a year, if that's what you're going to chase, then you have to have that up front. That's what you're trading for. Now, well, if you do that, you can make money, but you have to be willing to give up what would appear to be a winner and let it go to a small loser. That's very hard. Um,
Yeah, I mean,
so understanding your process, your trading plan, and how it works over time will help define that more than just trying to perfect it.
yep. There we go. All right, let's do rapid fire through some of these questions. Meek, I had asked you a follow-up question to your question there. Had three trades today off support on NQ on those touch points on the first 3 hours of the open. Got wicked out on each one, but directionally trades were good. Any advice on stops? Listen to what we just said about those. If your stops were a little too tight, maybe you were thinking dollar wise. I don't know how many contracts you were trading, but maybe you were thinking dollar wise with those. Think about where the market has to, think about how much space you have to give the market to do its natural fluctuations. And if that's too expensive, and the suggestion on some of these Nasdaq trades might be a 50-point stop, which sounds crazy. And if it does, it's probably because the dollar amount sounds crazy. If you trade the contract size that fits it, a couple of micros, then it might be a little bit more digestible, and then it keeps you in that trade, right? Because I understand the frustration of getting wicked out of a trade before it goes in your favor. And then last one, and I know we're at time. We have some people leaving. So thank you everyone for joining. If you haven't done so already, hit that like button on the way out. Extended Trip has a question. How do I use today's volume on the ES to determine if the move to the upside is being supported? Looking at the volume candles on the 15-minute, volume seems to be declining. So one thing I do want to point out with volume, especially because the volume moving average that we've had over the past 2 weeks or 3 weeks has been increasing. Remember the market conditions we just came from, right? For 3 weeks, we've been selling off. If you look at volume on a downtrending market, it's always going to be higher. Um, there's always just going to be more volume, more volatility, more range to the downside. But I just put, so we kind of see this volume moving average, this red line here. I put this white line going across. Outside of all of those big selling days, this is a pretty average volume day in the S&P. And then if we look when the markets trend up, they're all lower volume. So I think that's just the beginning of what we're seeing right now. ATR decreasing, volume's going to decrease because volume usually decreases on upside moves, especially on a higher time frame. So if the way I would use this information is if this volume stays like this, look at it throughout, this rally in 2024, pretty much all low volume with the exception of a couple days. That's how I would use that information. If it increases and gets back above this average, I would be willing to bet that that is going to be a downside day when it happens.
Also, Coach, put a 15-minute chart, and let's look at the first 15 minutes. Highest volume of the day without that close. What? Okay, and uh, over 80% of the time, probably much, maybe even 90% of the time or higher, that highest volume is going to come off the open. So it was bought. You can look at it, and declining volume, it kind of agrees with the original. So that you're going to see declining volume off the first candle, a
Yep.
large majority of the time. The fact that this came in, they bought it early. Buyers came in early and didn't leave, and less volume would be within a large percentage of the time. So, if I saw volume on the sell side that took out that low, then I'm wrong if I bought it. But we didn't see that.
Yep.
So I think it just confirms the original buying.
Awesome stuff. All right, one last question, just to make sure we get there. I would feel bad if we left one out there for what we got in Discord here. So for Kelly, how do you find the delta? It's not on Topstep X yet. There should be delta indicators coming soon to Topstep X. So most of the delta information that you hear is going to be coming from different platforms. I can show you what I look at really quickly. Just be aware that the screen you're about to see next is going to be a white screen. So just prepare your eyes. This is what I'm looking for as far as delta goes. This is Quantower, and it's resetting the data every day. These are 15-minute candles. So this value right here, the first 15 minutes, we can see was positive 3,900 contracts, which means that there were 3,900 more contracts bought than sold in that 15-minute candle. The way I'm reading this, and I think this is what I'm probably going to go over in some of the tech analysis stuff when we do those sessions. And Coach Paul, we've done this, how many times in Discord. The way I'm reading this information on a candle by candle basis and then over the day is, okay, buyers were stronger in this candle, right? 3,900 more contracts bought than sold. What did they get for it? The next candle, 1,900 more contracts were bought than sold. What did they get for buying those contracts? The next candle, 2,500 more contracts were sold than bought. What did they get for selling those contracts? If 2,500 more contracts were sold here than they were bought and price moved higher, if I'm a buyer, I'm thinking, if I'm a seller, I'm thinking, oh shit, I'm selling, price is not going lower, I have to get out. That pushes price higher, right? But we can do a deeper dive into all of that stuff sometime later. Coach, you got any final words before we go for the session?
Nothing more to add to that. Great job today, Coach, on all your segments, and everybody.
You as well, Coach.
Focus on your trading plan. That's the last thing I have to say. That's where the path to success really lies.
Awesome stuff. NCM Trader, that was in Quantower. That is in the volume analysis package in Quantower. You do have to pay extra for that volume analysis package, and those were the time statistics that I was looking at. But thank you, everyone. Trade well, manage your risk. Long week ahead of us, but there should be opportunities. Make sure you're available for those opportunities, right? Don't do anything that's going to take your account out of commission before the best trading time for you and your account. It's a big thing, right? If you are a great New York session trader, close your charts during Globex, right? There's no reason to go do something else and wait for the market to present you some more opportunities. All right, but until then, until we meet again, I'm Coach Jay. That's Coach Paul. And this has been fun. Have a great one.